Pashupati Advani, founder of Global Foray, is also joining us in the studio this morning. Good morning to you. How are you even, understanding what's been happening in the market? Because it seems like the market memory is extremely short-lived, and we've completely almost forgotten the pain that we witnessed 5 days ago.
Well, I think that, as you said, it's easy for people to forget, but when the pain comes, they'll be hurt again. But, I actually see this as a bit of short covering, bit of unnatural exuberance, because people did get short at lower levels, and, there is some covering. Also the festive season.
Is that all this is, just covering?
I don't know. I mean, I don't see any foreign buying coming in, and I also don't see increase in the mutual funds getting equity numbers. So, I don't know where the money is coming from, if you know what I mean. So, yes, I think there is a bit of short covering, and I think that people really thought that, we were at doomsday last week. So those guys are getting hurt this week.
Interesting. So, Pashupati, my question, part two of the question is, I know you're very active on not just fundamental investing, but also, using derivatives.
Yeah.
Now, in this fall that we had and the resultant bounce that we've had, have you put long only money to work, or are you still using hedges and derivatives to make money?
I think hedges and derivatives are really still the way to go, because there's going to be pairs trades, there's going to be value trades that are there, and there are some stocks that are not really going to move. So you can use that as a hedge for any kind of long short strategy. I don't think this is the area of the market to jump in with both feet fully long. I think maybe we
but
get
not
that.
Even dip a little?
Well, I don't dip a little.
As
means
in
yes.
long only, money to work. Not everybody is as smart as you to write puts or buy calls, etc. Right? So, what do those people do?
Yeah, obviously, when the market was at 10,300 Nifty and 34,000 Sensex, it's definitely worth looking at. But I actually see, you asked me today at 10,700 whether we're going to see 11 or 10. I think we might see 10 again before we see 11. So it's not like, I think we're in a range again. And we got out of the range, we went to 11.5, but then we're back in again at the same range.
The global markets seem positive, Pashupati. I mean, so I know the point that you're making, you might see 10,000 more, but if the mother market continues to rev up because of earnings, how will we fall?
No, so again, let's see what our earnings look like. I mean, some of the big companies have got good earnings, that's why the indices are hanging in there. The next tier companies are having issues. Everyone says that they're having execution issues. So let's see how their earnings come out and whether they're going to push or not. But so far this is the first half of the earnings season where we get the good guys. Let's see what the end of the earnings season looks like towards the end of the month, and I think those are going to be the interesting ones.
So my point being, so far we've seen a sort of a reset button being pressed on the Indian markets, be it on equities, be it on the currency. The froth that was there up until now, be it on the valuations, seems to have somewhat dissipated. So according to you, I mean, while you're saying that you're still probably going to see a 10,000 before you see an 11,000, how would you position yourself in a way that you take the most advantage of it?
See, I mean, if you look at what has actually happened, okay, crude prices have come down again. So the pressure has come off the OMCs. And I think that has been a major thing. But, we've had huge destruction of value of OMCs simply because of that 1 rupee having to get absorbed by them. But I think they're not lowered the prices even though crude has come down. So I think that 1 rupee is come back to them, if not, sooner rather than later. So that's an interesting space to be, because I think that I personally feel that crude is not going to go off to 100 plus, because I think that there's huge pressure on Saudi to produce more, and they are already producing more. And I think that the US is going to start, pushing out shale oil. And I think that will also, at this level, it's profitable for them. And I think that will also ease the world situation in 3 to 5 months' time, which is what Donald Trump wants, because the elections are coming. He definitely doesn't want to see, $4 gas at the pumps. He wants to see $2 gas. So, and that's happening in about 6 weeks' time. So, I think those are the things. I would say that today politics is driving economics as opposed to the other way around. For the last 10 years, we've had economics driving politics. Now we're having politics driving economics, and it is causing pain all over the place. And we are going to see it. I mean, the whole world will see it. The question is how long. And if you look at some of the larger hedge fund managers, they're all complaining, and they're all actually probably neutral to short. So they're also getting burnt. So let's see how things go.
But just from a perspective of how we've entered the earnings season, so far it's been optimistic, and projections also have been on the positive side. So in light of that, would that encourage you? Just for the timing, probably setting aside global concerns.
Yeah, no, as I said, this has always been a stock picking market. I currently actually feel that the OMCs is probably a good place to be in as a sector. I don't think there's much differentiation between any of the three. Also, there are pairs trades to be done between all three of them. So, that's also an opportunity. But, again, I think the rupee is still not stabilized. I think it still could get weaker, which is good for our IT companies, but not so good because people will start renegotiating lower. But I think that the other sectors that have done well continue to do well. Now you mentioned about building real estate companies. I don't think they're ready for a bounce yet. But the markets is looking at things like what hasn't moved, and therefore those are the ones that people are buying. But I think this is the time to be cautious and to buy. I mean, for example, if you were in HEG and Graphite India, that story's been around for 3-4 months, and if you were in it, you made double your money. So it's not like stocks are not going up, if not more. I mean, I think some of the stocks are more than twice up. Both those two stocks are more than twice up in the last 6 months.
What will be more than twice up in the next 6 months? Okay, now let me rephrase my question. Fundamentally, you mentioned OMCs as a place to look at. What else looks good from a long-only money deployment perspective, not necessarily for the next 6 months?
See, again, I think the fertilizer sector is worth looking at because I think.
Why so?
Because I think there seems to be some kind of consolidation and some kind of rationality in that sector. So now the subsidy is coming directly to the farmer, so he can choose, and the larger companies are going in there and actually giving advice on how to improve crop yields, and I think the proof is in the pudding that the work that has been done in the last 2-3 years by the major companies is actually coming to fruit. Crops are doing better. So people are beginning to believe and will start applying the money that's coming directly to them. Of course, we have issues of consolidation of fields. We've got lots of small acreages, but even that, I think, there may be some rationalization because people are beginning to share tractors and things like that. So, that's what I'm hearing anyway. So, I think it's a sector, it's not going to bounce immediately, but it is a sector that's going to be, probably good in this cycle.
By a Chambal and the private players, or by the government-owned fertilizer?
I think a mixture. I think a mixture because they also have capacity, and I think that you learn from one, and then you buy the fertilizer is the same product. It's a homogeneous product. So I think that's somewhere when one can look because they've been pretty badly beaten down as well. So that's an interesting space, I think.
Would you read too much into the ethanol story playing out for sugar?
Well, that again is a price. It depends on the price of oil. So I think that only plays out when prices are up here. And it'll certainly help the sugar manufacturers because they're all bleeding. But I think that ethanol production, it happens whenever you're getting above $60 a barrel, they start looking at ethanol again. So yeah, I guess so.
They put out tenders, Pashupati.
Yeah.
I mean, so does it aid? I mean, if they go on to 5% and 10%, would you be comfortable buying a sugar name?
Yeah, because I think that ethanol is a commodity. The OMCs are beginning to put ethanol into the fuel as a way of saving. So I think it's moving. The whole world has moved towards 5 to 10% ethanol. Cars don't seem to be complaining too much. So it's fine. I mean, it's a sector to be.
Yeah, I think the number.
And you can't import it. You can't import ethanol. It's too expensive. And
I think the number is 12.5. Until 12% blending, you don't need to change it.
So till 10, it's okay.
Till 10, it's okay.
Yeah. So I mean, most countries are somewhere between 5 and 10. I think our government has mandated 10 to the OMCs. So
for now 5 and I think 10.
Yeah. So it'll come 10. I think they've already announced 10 for next year. So therefore, they're going to be buying the ethanol, and that will keep the sugar guys happy.